Kia ora and good afternoon, everyone. As you all know, New Zealand has been suffering from high inflation and an acute cost of living crisis since the middle of 2021. Essentially, poor economic management and financial discipline created rampant domestic inflation and therefore rising interest rates, which have squeezed family and farm budgets. And that squeeze has driven the country into recession, and now unemployment is understandably rising. There is no doubt about it, it is currently a very tough time for Kiwis dealing with the cost of living. But today I am pleased to say that we are seeing some encouraging, albeit early signs of progress, that our government's economic plan is working. Doing our core job of stopping wasteful spending and getting the books back in order is a critical first part of our plan to rebuild the economy and to lower inflation and the cost of living. We are putting financial discipline back at the heart of government spending, and we have no intention of replicating the blowout budgets that we have seen in recent years and have contributed to that higher inflation and cost of living. But our plan also refocused the Reserve Bank on a single mandate of price stability. In fact, it was the very first piece of legislation passed by our new government. And we've stopped adding costs on businesses that push up prices, like the Ute tax and the Auckland Regional Fuel Tax, and landlord taxes like interest deductibility and Brightline. We've also reduced economic bottlenecks and cut red tape by restoring 90-day trials and abolishing mandatory union bargaining and fixing the CCCFA. In support of that fiscal discipline and economic plan, inflation is now tracking down fast, down to 3.3% from 7.3%, which is the lowest in 3 years. And food prices, as you will know, have fallen in annual terms for the first time in 6 years. And as a consequence of that falling inflation, it was encouraging to see today the Reserve Bank announce a 25 basis point reduction in the official cash rate to 5.25%. It has also been good to see the retail banks respond immediately today to the Reserve Bank's decision by lowering their own interest rates that they offer their customers. This is a start on the pathway to lower interest rates that will help family and farm budgets which have been under immense pressure. Yes, it's still incredibly tough, very tough for Kiwis, and there's still a long way to go yet. But today's drop in the OCR shows that our plan is beginning to work. Now that we're making real progress in the fight against inflation, our focus will shift to the next task, which is creating the conditions for economic growth. We know we can only lift wages and fund better health and education if we have a stronger and a bigger economy. And that's why we're focused on education, innovation, infrastructure, less red tape and international connections. Those are the foundations New Zealand needs to achieve higher levels of prosperity and higher living standards. With that, I want to hand over to our excellent Finance Minister, Nicola Willis.
Thank you. Thank you, Prime Minister. Today's OCR reduction to 5.25% will be welcome relief for households and businesses alike. The cost of living crisis that New Zealand has endured has been characterised by high inflation and high interest rates. So today marks an important milestone in beating both those beasts. The Reserve Bank's decision shows it now has confidence that inflation is under control and the era of extreme price increases is over. After 4 years where the only way for interest rates to go was up, the Reserve Bank is now forecasting an era of interest rate reductions. This means Kiwis will pay less interest on their mortgages and on their personal loans, easing the cost of living for families and improving conditions for businesses. Coupled with our tax relief package, we are now seeing a turning point in our battle to address the cost of living. We know it is still really tough for too many Kiwis, but things are going to get better. It is still cloudy, but rays of light are getting through. This government has been careful and deliberate in our plan to rebuild the economy, to get inflation under control so that interest rates can track down and green shoots of recovery are possible. Yes, it's early days, and yes, there's more work to do. But for now, today's announcement is an encouraging sign that we are getting New Zealand back on track.
Great. Happy to take questions.
Cheeky maybe taking credit for this. It was the Reserve Bank that did it, not the government. You seem to be talking like you've done it.
I'll just say to you very clearly, there are two components to tackling inflation. One is about fiscal policy and the other part is about monetary policy. And as I've said from opposition, when we first started talking about inflation, in the early days that Nicola and I actually became the leaders, we've said we have to get our fiscal settings straight and square. And the answer is very simple. You have to get government spending under control and the books in order so that you can actually put downward pressure on inflation. We did our job as part of our fiscal response, which is the bit that we're responsible for. The Reserve Bank has done its part around interest rates, which is the monetary policy. So those two bits coming together, working together to put downward single-minded focus on lowering inflation, which, as you have seen, has caused so much pain and suffering across New Zealand, is important for us to get under control.
But the bank actually said that in the monetary policy statement that the net impact of fiscal policy was uncertain.
Well, I'd just say to you that we have put an incredible effort to make sure that we are getting our books in order and we are doing everything we can to lower costs on businesses, to have good financial fiscal discipline. We've had a very tight budget, as you would have observed. We've had a big focus on savings. We are doing everything we can to make sure we play our role in getting fiscal strategy in the right place. Well, I'll just say to you, I'm not listening too much to the numbers because I think New Zealand is in recession and we have now get ourselves out of recession. Our first job is stop the wasteful spending, have good financial discipline, get downward pressure on inflation. That then leads to lower interest rates. That in turn gets the country out of recession and ultimately keeps people in employment. So from my point of view, getting out of this place, talking to New Zealanders up and down this country, we are in recession. It feels like a recession. It is a recession for them. So that's very much our next focus is right now we've got to get interest rates continuing to on a downward path and we have to get economic growth into the joint.
Can I just note, Richard, that the committee did note that government expenditure is declining as a share of the economy, with contractionary impacts already felt and expected to continue. Well, the point has always been that we reduce spending in the mini budget, we reduce spending in the main budget in order to finance tax reduction. We've paid for every dollar.
How nervous were you ahead of the decision as to whether the tax cuts might have the role impact?
Well, I was very confident because the advice I'd received from the Treasury was that the way we were funding tax relief meant that it wouldn't add an inflationary impulse. Of course, I've also looked into the eyes of many New Zealanders for whom interest rates are far too high, and so I was very hopeful for them that today could be their day, and I'm glad that it is.
You were confident that RBNZ was going to make a decision?
No, I was confident that we were not contributing to inflationary pressure with our tax relief package.
What do you hope to see happen next in terms of the interest rates track?
Well, what the interest rate track that the Reserve Bank has published today shows is that they are forecasting more reductions in interest rates. Those decisions are for the Reserve Bank. They will be made independently of the government. I'm confident that we're doing our bit with our own spending so that we're not adding fuel to the inflation fire that has burned for the past 3 years. And I noted your question, Jason, to the PM, saying you took the credit, and I can bet you, if inflation had gone up, you would have all looked at us and said it's your fault.
What do you make of the Reserve Bank only in May suggesting we'd have one more OCR hike or could have one more OCR hike in the first cut in a year's time? What do you make of the major change of position?
Well, look, the Reserve Bank makes its decisions. We make our decisions. I don't comment on their decisions, and they don't tend to comment on ours.
Many were forecasting that this wouldn't be the case, and some said it would be crazy if it did happen. So what's your read on that?
Look, my read on that is that there's a lot of data coming through, but what clearly has come to the surface for the Reserve Bank is that they're now confident inflation is under control. That is an important milestone. They're now tracking inflation to be back in band this year. That's welcome. We should also read in the news today that this is good news for everyone who shops at a supermarket or faces prices, because the Reserve Bank is saying we think that this time of really big price increases is over. That's positive, and that's given them the confidence they need to reduce the official interest rates.
Is the pressure that you're putting on the public service worth it for this? So today we had a Health New Zealand meeting that accountants were predicting 470 specialist roles, 491 nurses to go. Is that a direct impact of the pressure that you've been putting on the public service?
Well, I'll just say to you, I think Commissioner Lester-Levy ruled that out incredibly strongly and said that is completely wrong and inaccurate. We want to see more investment in frontline services, and that's what's incredible about our budget, is that in difficult times we managed to generate $24 billion worth of savings and get that money reprioritised into the frontline. But with respect to that individual story, Lester-Levy's come out and declared it pretty strongly it's false.
Different example then, the providers to auto maybe if you give them 4 hours notice that their contract is going to be cancelled. Cut with it.
Well, I'll just say to you, if you get out of this place and you go talk to a person who's got a mortgage and fortunate enough to own a home but got a big mortgage with their banks, what they've observed over the last few years is a massive increase in interest rates that for many of them means they've got to find $700 extra a fortnight. If you go talk to hard-working Kiwis on lower middle incomes that are struggling to get by, which is why we gave them tax relief, they're going paycheck to paycheck just trying to pay for fuel, food, rent and mortgages if they're lucky. And so I just say to you, we are...
In that vein, if you go and talk to the families that use the services that Oroga-Tamariki was providing, who turned up on their doorstep and 70 of them were turned away because the service wasn't provided.
Well, as I said, around Oranga Tamariki, there is a process going on where there is $500 million worth of spend and 550 providers. Oranga Tamariki wants to make sure that they're actually getting value for that spend and that actually what is being promised and what is being contracted for is actually being delivered, and so that there is actually not a reduction in frontline services. It may be delivered through a different mix of providers, but also reassuring itself that those providers that it partners with actually are looking after our most vulnerable children.
Providers aren't being given any notice and not being told by Oroga-Tamariki to government is, are you moving too fast for the system to keep pace with the cuts?
No, we are making sure that we are getting value from taxpayers' money as it is spent by the government. And we have been very clear about that coming in. And we are under new management and we are making sure that CEs of agencies are making sure that what they are doing, what they spend their money on, is actually having an impact and is actually helping us get better outcomes and better results. They may spend the money in a different fashion, in a different way. With respect to Oranga Tamariki, it's very much an operational process for them, but I do observe that they have a big spend, they have a large number of providers, and they want to make sure that when they contract for 15 kids to be supported, they're not paying for 10. They want to make sure that when they are contracting, that those kids are actually going to be protected and well looked after well.
Can I also just note on Oranga Tamariki that overall their funding in the budget increased?
Yeah.
Obviously, fiscal policy is now having a better effect on monetary policy.
They're joined up.
Are you planning to continue to keep your foot down to make classified savings, make fiscal policy more of a monetary policy, driving interest rates output?
Well, we owe to New Zealanders discipline and better value for the money we spend on their behalf for two reasons. One, to help keep inflation under control, but two, because the last government built up a really significant debt burden. So we need to get the books back in balance so we can pay down that burden. We've fast-tracked how soon that will be. If we'd left it the way the last government left it, we would have been running up deficits until 2031. We've brought that forward, but that means we've got a job to do to drive more value from every dollar. So discipline continues. Absolutely. Every New Zealander who loses a job is a New Zealander that I worry about, and so that is why we are so focused on rebuilding the economy. We've always said you need the foundations in place. That's about low, stable inflation. That's about interest rates coming down, and we've got to do everything we can to encourage businesses to hire people, to invest, to have confidence that this is going to be a great country to grow in.
Just on your...
Well, look, what the forecasts are telling us is that growth is going to be reviving in the later part of this year and coming on more strongly next year. What the Reserve Bank data tells us is that there could be a bit of a lag effect with unemployment. Our job is just to do everything we can across the board, whether it's regulation, whether it's education, whether it's infrastructure, whether it's trade, to push growth and give businesses confidence. This is a country where the government backs you, go out and hire people.
Have you got a target for how much you want public sector to save coming into the next budget, particularly given that you've got such a small operating allowance?
Well, exactly. So that operating allowance gives great clarity that there is no lolly scramble coming in Budget 25. The message we have sent to government agencies, if you've got new ideas, that's great, but you better find something that's less value for money that you're going to reprioritise to do that new idea.
How are you going to deal then with the projected $1.3 billion deficit?
Well, as you know, we've appointed a commissioner. We are in there making changes right now so that dollars are going where they can make the biggest difference in our health system, to the front line.
Yes, I mean, I've got every confidence in the Commissioner, but what I'd say to you again is we have a completely different approach to government spending. It's not just about the layer cake that gets added in an operating allowance in each budget. It's actually about the spend that's already happening and occurring. And we expect that to be turned over and reprioritised, and where things are not working, actually put to things that are working. And so we expect the core budgets, the existing spends, to be really worked and tilled over as much as actually making sure that we have money where we need to go in the budget operating allowance. Sorry, so I go to Ben. Yep. Look, I'll be talking to Prime Minister Albanese about that on Friday, and so we'll raise it in our bilateral, as I always do. Sorry, Joe.
The question is how are you going to approach that issue? Is called it wrong?
Pretty directly, in the same messages I've previously given, and it's consistent conversation. Yep.
Just on the...
You've made a couple of notes this week on the benefit sanctions policy. Are you across the details on this?
Yes, yes. What?
In terms of the fact that
Oh, yes. 4,000 and the 2,100. Yeah. Yeah, but I corrected it for Radio New Zealand. Yeah, I got it wrong. Well, I am, but I want to be really clear on unemployment. It's all very well to give me a quick answer, and if I give you a number, and there's actually, I know there's a range, and there's a number of different conditions depending upon age and whether people are living at home or not. So I just say to you, I'm very proud of that policy, because what we are doing is making sure that people actually who receive a benefit are making sure that they're holding up their obligations. And it's pretty simple. Get a CV, show up for the interviews, show up for your case manager.
Just on your...
Just back to budget when it comes to health. What do you say to the people of Nicola down on the West Coast whose hospital is frequently closing overnight? The people who told me today that it's a matter of when, not that there's going to be a death.
Well, look, I mean, we know that the healthcare system is under huge pressure, and in many cases across rural New Zealand it has been under pressure for many, many years. We are working incredibly hard to lift, first of all, put targets in so everybody's focused on what needs to happen. Then we're talking about the funding, getting the money as $16.7 billion that's been added into the health budget from the back office to the front line. And importantly, we've got to keep working hard on the workforce. And as I've said before, we've made tremendous progress on nurse recruitment over the last 12 months, up 2,900 extra nurses, the most we've ever had in this country. But we do have real workforce challenges in rural New Zealand. We also have it in critical areas of critical health and mental health as well. So, we're going to continue to work our way through those issues. But, we know it's tough and challenging, but we will continue to make sure that we are doing everything we can on workforce, on targets, on funding, and importantly, why we want to have a really good, high-quality Health New Zealand is so that we can actually make sure we put money in, it's going to get to where it needs to get to.
Can I just ask
Sorry, John.
Very briefly on the Australian trip, you sort of focus on infrastructure going into Sydney
tomorrow.
Why infrastructure and why Sydney?
Because, as we've talked before, we need to be able to make sure that we can attract foreign investment as well as local pools of capital, private finance, into helping us develop and get public infrastructure built. And whether you've been in Victoria or whether you've been in New South Wales under Labor or Liberal governments, there's been a consistency of approach of actually doing things like public-private partnerships. And so the reason I've got the three infrastructure ministers with me is that we've got an opportunity to meet and see how they go about that process, in the same way that I met with Jacinta Allen in Melbourne and Victoria. I had a similar conversation with her and her team about infrastructure. As we talk now, we have been, I've been trying to be really clear about the pattern of what we're dealing with in the short term. Government spending, fiscal discipline. That then puts pressure on inflation. That then leads to lower interest rates. That leads to economic growth, and that ultimately leads to lower unemployment. That's job one. But then the second job that Nicola and I are working hard on is what's the economic growth plan? And when you look at the foundations that we need to have in place to make this a more prosperous place, a more economically productive place, one of those five things is definitely modern, reliable infrastructure. And as we've talked about before and been very transparent about, we will not be able to do that alone with the government's balance sheet. So we are open to getting more investment in and to be able to work in public-private partnerships in a way so we can get that infrastructure built quicker and get the benefits through economically, socially and environmentally to our people.
So that's the plan tomorrow to woo Aussie investors?
I'm meeting with investors tomorrow, but I'm talking to government folk and premiers and former premiers, current premier and former premiers about how they manage infrastructure. I have a big speech to do at the Lowy Institute. I talk with business people, a business gala dinner in the evening as well, and then down to Canberra on Friday.
Are you confident in
Well, that's a decision for the Governor of the Reserve Bank and his Monetary Policy Committee.
Nicola, can I just quickly ask, going back to a conversation a couple of weeks ago where you said my frustration is your frustration in terms of the health situation, given the sort of internal comms meltdown that seems to be going on about whether what Jenna was referring to, the cuts are or aren't going to happen, how is it possible for yourselves plus New Zealanders to have confidence in the senior leadership there when you've got a commissioner who's now calling to question the information that's been shared in that organisation?
Because the Commissioner's in there, boots and all, sorting it out.
Okay, team. Thanks so much. Appreciate it.